So good evening everyone. My name is Maurya Hanspal, and in this session we want to begin our series on investment banking. And this is the session number one on completely and pure uh, investment banking that we're gonna talk about in these sessions. So firstly, like before understanding the major concepts on investment banking, we need to understand what exactly do we mean by investment banking and what exactly people do into this profession or into this field of investment banking. So first of all, investment banking is one of the highest paid jobs, like the most highest paid jobs in the field of finance, and the one of the highest paid jobs among the large number of jobs like present all over. And why these investment banking jobs are the highest paying jobs, so that I would be discussing in the subsequent sessions or like within the session at the last part. Okay. So first of all, we need to understand what is the role of an investment banker and what does an investment banker really do. A large number of people think that the role of an investment banker is just to help the companies come up with an IPO. By an IPO, I mean the initial public offering. Because a large number of companies appoint the top investment bankers to help them value the company and bring their IPOs. And then we talk about all the concepts of the IPOs and initial public offerings, that the lead manager is coming in, and the lead manager is like nonetheless but an investment banker only. Then he further appoints some more bankers who form a syndicate, right? So all these are something which people know and they get to know on the face of it. Because everywhere, like when we listen to the top news channels also, or like read the top business articles also, like there we get to know that these companies are the top investment banks, and these companies are helping the companies to come up with the IPOs of the companies or the initial public offerings of the company. So these things are told to us in various news channels, in articles, or textbooks on finance. But no one really tells us the real role of these top investment banks or what an investment banker really does in the job. So that things we need to analyze, and we need to know what an investment banker really does. So when we talk about the field of investment banking is not only about coming up with the IPOs of the companies or like telling just the basically the share prices of the company and like invite people to apply for the IPOs of the company and be the further underwriters of the company. Now the question comes, who are the underwriters of the company? So basically the underwriters are used in case of an IPO, and those are the investment bankers only or the persons associated with these investment bankers who guarantee us that they would be subscribing to the issue that we are giving it to the public. Like for example, if have a total size of like 100 crores I want to raise from the public, so I would expect that at least the 100 crores are there. मतलब 100 crores की मेरे पास application आ जाती है. And a large number of IPOs you see are oversubscribed also. It means उससे ज्यादा की application आ जाती है. In that case, the shares are allotted to people on a random basis or a pro rata basis. तो सबको कंपनी के shares नहीं मिलते. But कभी कभार the scenario can also be the other way around as well. There can be a situation when the company has come up with an IPO and the issue is undersubscribed. 100 शेयर्स थे, 100 शेयर्स मार्केट में आने थे, ठीक है, बट जो डिमांड आई बस 90 शेयर्स की आई. Instead of the share being oversubscribed, that only the 100 shares were available to be sold in the market by the promoters of the company, the demand was not there for like 200 shares or 300 shares as we see in the usual case of an IPOs. The IPOs get oversubscribed and the remaining shares are given to people on the pro rata basis. Okay, shares जो कंपनी ने बोला है 100 तो कंपनी 100 ही देगी, एक्स्ट्रा शेयर नहीं देगी. एक्स्ट्रा शेयर दे सकती है, so that's a different concept and we call it as a green shoe option, and we'll be talking about it in subsequent sessions. Okay, so coming back now, if out of those 100 shares, so totally let's come to the fact the company wants to give 100 shares to the public. So out of these 100 shares, the demand just comes for 90 shares or 80 shares. Then what would the company do? Ideally, it would be termed as an undersubscribed IPO. And if an IPO is undersubscribed, it means people are not demanding the shares of the company. And the demand is very bad. Ultimately, it can hurt the sentiment of the people as well, and people can further withdraw their applications who have applied in the IPO of the company. So that can create a problem for the company. So in that case, the underwriters were indeed the investment bankers. I'll write this term, underwriters. You have underwriters. who are indeed the investment bankers, they agree to subscribe to the remaining issue. 100 shares market में देने हैं, बस 90 the people have subscribed, so 10 they would buy it. And that is as per the market conditions. So they promise us that they would be guaranteeing the buying the shares basically up to a certain extent. अब ये नहीं है कि मान लो कि शेयर्स की डिमांड बस 40 आई एंड लाइक इन्वेस्टमेंट बैंकर्स जिनको हम अंडरराइटर्स इस केस में बोलते हैं, तो फिर वो लोग उन्होंने बोला कि हम 60 शेयर्स हम ले लेते हैं. देयर इज ऑब्वियसली अ लिमिट अप टू विच दे वुड बी सब्सक्राइबिंग द रिमेनिंग पार्ट ऑफ द आईपीओ. And that limit up to which they can subscribe, this process is called devolvement. Devolvement. Like no one talks about this terms of devolvement. People just talk about the IPO being oversubscribed, undersubscribed, the underwriters have come in, that's it. Okay, so really people looking at this ki underwriters ne kitna liya issue, and ideally like this information is not gone to public also, because ultimately if this information goes to public and people get to know that out of the 100 shares only just like 90 or 80 shares were like in demand by the public, it can hurt the consumer sentiment and ultimately the goodwill of the company also. But like these things can come out also because nowadays the market has become more transparent and people get to know everything, like either through the backdoor processes or some like illegal and like privacy issues, like people get to know these stuffs. Okay, so ideally a company has to show its performance and company has to prove itself at least for the foreseeable future that the company will do well. And if the investors or the general public, and especially the retail individual investors who invest in the market max to max till 2 lakh rupees, they should be well aware of all this. So this process is called devolvement. Okay. So basically see, and like the process is called underwriting. So if after the issue के बाद हुआ है, so this we call it as soft underwriting. Soft underwriting because after the issue, the remaining shares which have been left are subscribed by the underwriters. But if the underwriters vis-a-vis investment bankers, they agree to subscribe and buy the shares of the company before this process, like before the demand is known, it's called hard underwriters. And why they are called hard underwriters? Because here they are taking more risk. Okay, because subscribe होने से पहले, डिमांड आने से पहले ही उन्होंने बोल दिया कि 100 में से हम 50, 40, 30 हम जितने भी होंगे हम ले. Okay. But what exactly does an investment banker do apart from all this? Is the role of the investment banker just limited to this? Just limited to this. That is just coming up or helping the companies with the IPOs of the company and being the underwriter, that's it. Is this job really the highest paying job in the world? In the real world, is this job really the highest paying job in the world? In the terms of finance. Though there can be some more jobs as well, like which can be much more high paying jobs in the field of investment banking. But is it the highest paying jobs? Yes, in the field of finance, it is the highest paying jobs, but how? See, like investment bankers are involved in locking the deals. And people compare this job of investment banking with sales as well. And why they compare it with sales? People who say that we do not want to do sales and we want to go into the field of finance and do investment banking, those people must be much more cleared with that investment banking also involves sales along with finance, because ultimately you have to sell the product and ultimately you have to like close in the deals as well. Because when a company is coming up with an IPO of the company might go to like various banks for the valuation purposes. By the purpose of valuation means how much share price, because obviously the people or the company have to decide in consultation with the top investment banks at what price they have to sell the shares in the company. They cannot come up with just a random figure. They have to value the company. So in terms of that, how much is the share price of the company, how much they want to raise, it has to be calculated by taking into consideration a large number of scenarios. So this the company cannot do in a random basis. The company's promoters or the top management, they cannot just wake up in the morning and say that I will sell my shares at a price of 200 rupees per share. There must be a logic behind that, and this logic is asked for the justification by SEBI also and various other people who question the valuations of the company. So you must have a backup as well. So now the question arises, how these loss-making companies got listed? Because these companies were the loss-making companies. These companies had no profits and these companies had no cash flows. Then how these companies were able to get listed? Not only the cash flows, but the profitability, the future projection of the company, or the future forecasting of the company is also important. One needs to be able to forecast at least a terminal value for the company, that is, a final point at which the cash flows of the company would at least be steady, at least be positive. Because at least in the long run, if the company is into the negative cash flows and the losses at a present scenario, at some point will come in future when these kind of negative cash flows will reduce either in the form of the negativity value or will become at least zero or positive. So these things have to be calculated, and these are done by the financial analyst, which is a pre-version of an investment banker, you can say. Because an investment banker, his job is not only to struck the deals. I will be like valuing your company. Indeed, he must know how to value the company, because he indeed won't come alone. He would be coming with a team of more bankers, which we call as a syndicate. That is not just one investment banker. I mean, like for example, like there is an investment bank A. So from there, just one person, maybe Sham. So that person cannot come in and value the company. He will come with 5, 6 more people, and they would be valuing the company, advising the management on the valuation, at what price, calculating the financial ratios, how to talk with the reporters, the companies, because these companies' management are also called into the top business channels to talk about. So पूरी बातें होती हैं, क्या करना है, क्या नहीं करना. So all these things are talked about. Also, the company also needs to be satisfied with the deal, because obviously an investment bank who is being the lead manager, the person who frames the guidelines and comes up with the share price and helps the company to come up with an IPO, that person is called the lead manager. So ultimately, that lead manager would also be charging a price as per the company, also his commission as well. So these things will come in. So the company that will give him the best price. Okay, because if a company is there, if my company B is there and I am consulting a bank A, okay, so I won't be consulting just the bank A. I would be consulting C, D, E, F, G, H, I, and the bank that would be giving me the best possible deal. So that would be becoming my lead manager. So now you might think about a company would go for an investment bank that gives the deal at a least price. No, it's not always there. A company might give you the deal at a least price, but the services that they're offering, it might not be up to the mark. So people can go for top investment banks as well, which can command a higher premium, a higher amount of commission from them, but the work would be as per the market and what they want. And in a large number of scenarios also, like when we talk about the FPO, the follow-up public offer, that is, if a company wants to come up with an IPO once again and come up with the fresh issues in the market, the same investment banker is appointed in 99.9% of the scenarios. So these things also have to be taken into consideration. So the price and the fee matters, but first of all, the services also matters, because you need a person in front of you who is interacting with you and talking with you as a person of your company, who is advising you and giving you a fair view instead of just giving you the services at a cheap price. So these things have to be taken into consideration. So apart from locking the deals of the valuation of the company, or like helping the company bringing up the IPO of the company, he's also responsible for the task of the mergers and acquisitions as well. Because not in a single balance the company can do the mergers and acquisitions. Like for example, if on today I want to merge myself with the other company, or I want to acquire some other company, or I want to amalgamate myself with other company or take over some other company, because these things are the major things like which they talk about in investment banking: mergers, acquisitions, which are the asset mergers, and amalgamations are the asset based route, and acquisitions and takeovers are the equity based route. So they talk about like these four terms, like sometimes interchangeably also, which is not correct. But a person who has knowledge of these things, like he won't use the terms interchangeably. And these investment bankers and financial analysts have knowledge about that. Okay. So coming back to the topic. So when we talk about these, in the deals of mergers and acquisitions, like for example, if my company wants to like merge with the other company, so the next day I cannot just merge myself with the second company. I'll have to call an investment banker, and that person would be guiding me that how much assets I have to sell, how much assets I have to buy of that company, how much equity would be exchanged, how it would be exchanged, what would be the share swap ratio. Because in case of merger, you have a share swap ratio. And what do we mean by share swap ratio? If I am acquiring that company or merging myself with that company, how much shares I will offer to the shareholders of my acquiring company on the basis of the existing shares they have. So the opposite of a merger can be demerger. In a demerger, we have the share entitlement ratio. So all these ratios are calculated by this. So share entitlement ratio is just the opposite of the share swap ratio. कि जो कंपनी अलग में कर रहा हूं तो उसको मेरी कंपनी के शेयर्स कितने बनेंगे, एंड जो कंपनी अलग हो रही है दैट इज द रिजल्टेंट कंपनी, एंड माय कंपनी जिससे मैं उस कंपनी को अलग कर रहा हूँ इट्स अ डीमर्ज्ड कंपनी, मेरी कंपनी अब डीमर्ज हो गई. सो हाउ मच शेयर्स आई एम ऑफरिंग टू द रिजल्टेंट कंपनी, जो नई कंपनी बनी है, उल्टा. ओके, so these things have to be calculated by these investment bankers for mergers, acquisitions, even like there is something in finance. In the case of investment banking, we call as the LBO transactions. Though these are not much in India, but outside India, these are a lot. And these we call it as a leverage buyout operations. Like for example, if my company wants to acquire a company B, so my company is A and the second company is company B, and my company A wants to acquire the company B, right? And my company does not have money, cash, profits, and to buy the company B basically. So I'll be buying that company on borrowing. मतलब borrow करके मैं वो कंपनी खरीदूंगा. And when I'll buy that company, from the revenues, from the earnings, from the assets of that company, I'll be selling off the assets of those company, and cash जो भी मुझे वहां मिलेगा, I'll be using that to pay off the debts. So these leverage buyout transactions are also done. And now I will ask that मतलब कि what is the benefit of the LBO? Because ultimately उस कंपनी को जो तुम कर रहे हो ना एक्वायर, उस कंपनी में कुछ बात होगी. यू माइट थिंक चलो अभी के लिए उस कंपनी के कैश या रिजर्व्स या एसेट्स को बेच के अपना मतलब कि डेट चुका रहे हैं, बट ये नहीं है कि एक बारी में तुम चुका रहे हो एंड कंपनी खत्म हो गई. अगर तुम एक बारी में चुका रहे हो तो द सेकंड कंपनी दैट यू हैव एक्वायर्ड इज गॉन, इट्स इनटू लाइक लिक्विडेशन बेसिकली. मतलब लाइक इट वुड बी ऑन अ पीरियोडिक बेसिस, मतलब कि डेट रीपेमेंट जैसे होती है, तो सिमिलरली ऑन अ पीरियोडिक बेसिस लाइक यू विल बी डूइंग दैट स्टफ. तो तब तक वो कंपनी भी अच्छा परफॉर्म करने लगेगी, because you know that you have acquired that company for the purpose of something. The leverage buyout transactions. Similarly, you people can have the management buyouts. So what happens in a management buyout? The management of the company, like they buy the company itself, as happened in the case of Dell as well. You have the management buy-in. In management buy-in, the other management it buys the it buys your company. So all these things are present. So you need to structure the deal for that. You need to call the investment bankers for these purposes. For what purposes they are doing. So all these things have to be taken into consideration when we talk about an investment banker. So when we talk about investment banker, what exactly, so these were just a brief of what these people do. They have to know about fundamental analysis. They have to know about fundamental analysis. So what do we mean by fundamental analysis? A fundamental analysis is the analysis of the company on the basis of the past performance of the company. And how do we check the past performance of the company? We can check the past performance of the company on the basis of the annual report of the company. And now what is the annual report of the company? The annual report of the company, it gives you a snapshot of the performance of the company. At what performance the company has done in the past and how has the company actually performed in the past. Okay. So basically it is giving you a snapshot of the performances of the company. Now the performances of the company in the annual report can be showed through the profit and loss statement of the company, which is also called the income statement of the company. The balance sheet of the company, which is also called the position statement of the company. The cash flow statement of the company, which shows the performance of the company. The statement of equities, which shows you your equities, your other equity and reserve surplus, all sabka data. Then obviously the notes to accounts. And what exactly is the notes to accounts? If you want to know the detailed understanding and interpretation of all these items, कि P&L में कौन सा आइटम कब आया, क्यों आया, एंड ये अमाउंट चेंज क्यों हुआ, एंड रेवेन्यू बढ़ी या कम क्यों हुई, एक्सपेंसेस बढ़े कम क्यों हुए, एंड प्रॉफिट बढ़ा कम क्यों हुआ. So all these things you can gauge through the notes to account. Similarly for the balance sheet also, because again the balance sheet में you get to know the position of the enterprise, how much assets the company has, कितने बड़े हैं, कितने कम हुए, कितनी liabilities है, बड़ी कम हुई है. So all these things you get to know from the balance sheet of the company. So these things can be known through the notes to accounts. Again, reading the management discussion and analysis, what exactly the management is saying about the company. And we popularly call it as the MDA analysis, the management discussion and analysis, MDA basically. Okay, so these things have to be taken into consideration as well. right? So MD में मतलब कि management क्या बोल रही है, because like when you open the annual report of the company, there is a message from chairman of the company or the director of the company. In 90% of the scenarios is from the chairman of the company. फिर वहाँ पे लिखा होता है कि डियर शेयर होल्डर्स, वी हैव डन दिस इन द पास्ट ईयर एंड लाइक वी आर प्लानिंग टू डू दिस मच इन द फ्यूचर ईयर, राइट? Again, you have to read the auditor's report of the company. The auditor's report can be a qualified auditor's report. A qualified report is something which is like completely fine, but the only problem is it has not been compiled as per the accounting standards. Then you have an unqualified report, which is also called the clean report. It means it's like completely fine. It has been made as per the standards of the accounting, and there is no fraud and no manipulation also. The third one is the adverse effect. In the adverse opinion, there is something because it means that the report has been compiled, maybe, okay, or there's like some misrepresentation, some fraud, some forgery, some window dressing. So both these things have been compiled. And when they talk about the disclaimer of opinion, so a disclaimer of opinion is when the auditors of the company had been prevented to get access to sufficient information from the company. So in that case, the auditors say it specifically that we wanted to get some further understanding on those specific matters about the company, and the company did not provide us with the certain information for that. And as a result, we were not able to give a fair analysis or understanding on these matters. Understood? So these things they talk about. So fundamental analysis, they take into consideration and they also predict the future of the company on the basis of these values. Okay. And they take into consideration some microeconomic and macroeconomic factors as well. They do the EIC analysis. The EIC analysis is there. E stands for economy, I stands for industry, and C stands for company. Okay, so if you are analyzing first as economy, then industry, then company, it's a top-down approach. Top-down approach. Whereas if you are analyzing company first, then industry, and then economy, it's a bottom-up approach. Okay, so these things are also there. Economy, industry, and company analysis. So these things are present. Okay. Now you need to see how the economy is working. How to judge the economy? You can judge the economy through the means of checking the GDP of the company, the gross domestic product, which is nothing but this, like the market value of the goods and services produced like within the country. The national income of the country you can check out. You can check about the consumer confidence index, the purchasers managers index, PMI numbers, the Gini's coefficient, like it shows you the difference between the income disparity of like rich and poor, the core inflation, headline inflation, basically the CPI number and the WPI number. So all these things you can check around. Okay. So basically these things have to be checked around. And you have to see the gap between the WPI and CPI. The gap between the WPI and CPI is increasing. It means like inflation is rising. The gap must be like reducing, because like why this gap would increase? Because like when we talk about the WPI, the wholesale price index, it is nothing but when these producers or manufacturers are like procuring at a cost, and जितनी cost बढ़ा के वो तुमको देंगे, मतलब because of inflation, because वो खरीद महंगे पे रहेंगे. अगर वो खरीदेंगे भी सस्ते पे, अगर उनको बेचेंगे भी ठीक प्राइस पे, तो देखो प्रॉफिट तो होगा, ठीक है, बट अगर वो कम प्राइस पे बेचेंगे तो एक डिस्पैरिटी भी कम हो जाएगी. ठीक है. सो अगर मान लो कि सप्लाई कम है किसी भी प्रोडक्ट की, लाइक इन्फ्लेशन एंड ऑल है, सो दीज थिंग्स कैन क्रिएट अ प्रॉब्लम. ओके. Then you have to, after analyzing the economy, you have to see the industry. Like for example, your concerned industry is a fast moving consumer goods industry. ठीक है, तुम FMCG industry देख रहे हो. So now you have to see how has the FMCG industry performed. अच्छा परफॉर्म करा या बुरा परफॉर्म करा. अच्छा परफॉर्म करा तो क्यों अच्छा परफॉर्म करा. अगर बुरा परफॉर्म करा तो क्यों बुरा परफॉर्म करा. Okay, so these things have to be taken into consideration. Okay, then you have to see like basically what kind of pressures the company is facing. मतलब कि pressures company क्या face कर रही है. Because nowadays we can see the margin pressure, because ultimately the raw materials costs have increased, because wheat, barley, palm oil, ये जितनी भी चीजें थी like they used to import from Ukraine, Russia. तो wheat का like अपना भी export है, उसकी ज़्यादा टेंशन नहीं है, बट मतलब कि बाकी चीजें होती थी export. So basically the raw material price has increased and that is hurting the margin pressure. So that's like one more issue, like which can be talked about in the industry analysis. Okay, so that is one thing which they also talk about. सो उसके बाद जब तुमने लाइक इंडस्ट्री को समझ लिया, देन तुम कंपनी को एनालाइज करो कि हाउ इज द कंपनी परफॉर्मिंग, इज द कंपनी परफॉर्मिंग गुड और बैड. Like for example, you took HUL. Now you have to see how has the company performed. Has the company performed good, bad, अच्छा perform करा है तो क्यों? And that you can see from the annual report of that company. अब जब fundamental analysis हो गया, इसके बाद what do you go for? You go for creating the financial model of the company. So basically financial modeling is something, कुछ भी तुम एक्सेल पे तुम नंबर से कर रहे हो, इट्स अ फाइनेंशियल मॉडल. ओके, सो डू नॉट गेट वेरी पैनिक दैट फाइनेंशियल मॉडलिंग इज वेरी टफ, पता नहीं क्या कराते होंगे. एक्सेल पे तुम इनकम स्टेटमेंट भी बना रहे हो ना, दैट्स अ फाइनेंशियल मॉडल. ठीक है, एक्सेल पे तो बैलेंस शीट, एक्सेल पे तो अपनी सैलरी स्ट्रक्चर भी कैलकुलेट करो, अपनी सेविंग्स का स्ट्रक्चर भी कैलकुलेट करो कि सैलरी आ रही है तो कितना खर्चा कहाँ करो. इट्स अ फाइनेंशियल मॉडल. ओके, but in investment banking, what a financial analyst does when he calculates the financial model of the company, he's trying to project the future cash flows of the company, or basically trying to do the future projection of the company. कि अगर आज प्रॉफिट्स इतने हैं as on 2022, 23, 24, 25, 26, 27, 5 years from now कितने होंगे? Each and every item he has to predict in certain manner, and these are just the predictions. It does not mean that he or she will always be correct. Even the top investment bankers and top financial analysts have been wrong in valuing the company. Okay, so that you have to see कितना future में उसकी value हो सकती है. Okay, so basically each and every item, like for example, like when we start from the P&L of the company. So the P&L of the company starts with the incomes or revenues, and then you subtract the expenses, and then you get the profitability. So this you need to know how much income the company is able to project in future. तो मान लो पिछले 5 साल का 22, 21, 20, 19, 18, 17 की वैल्यूज तुम्हारे पास है, and you have to calculate the future value की 22, 23, 24, 25, 26, 27 की value you have to calculate. That you need to know how to project the future. Like certain sessions have been done by me only on like financial modeling, like which are there on YouTube. Okay, so you can go through and like watch those sessions as well. तो हर एक आइटम सिमिलरली अगर कंपनी को लॉसेज हो रहे हैं, ठीक है, तो प्रॉब्लम आती है कि these like Zomato, Paytm say that the losses will be transformed into the profitability. And how do they do it? Okay, so again you cannot like project on the basis of the past performance, because अगर कंपनी को लॉसेज हो रहे हैं पास के 5 साल में, एंड वो लॉसेज बढ़ते जा रहे हैं, एंड अगर तुम उसी लॉसेज पे तुम ग्रोथ रेट लगा दोगे, ठीक है, तो लॉसेज तो बढ़ते जाएंगे और भी, राइट. तो वो चीजें हमको देखनी है ना. तो दैट थिंग यू हैव टू सी. उसमें तुम्हारा क्या होगा कि कंपनी के अमाउंट्स या कंपनी की फाइनेंशियल स्टेटमेंट्स काम नहीं आएंगे. उसमें यू हैव टू सी द रियलिस्टिक व्यू ऑफ द कंपनी की एक्चुअली कंपनी चाहती क्या है. And similarly, it goes for the balance sheet as well and cash flow statement as well. And then further we calculate the enterprise value. Okay. So these things are important, like which should be known to you in a very precise and accurate manner. So like we'll talk about more about the jobs of like investment bank.